Hello, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is Monday, April the 28th, and we have Brent crude oil trading up a little bit this morning at $67.24, up about 0.5%. Pretty much unchanged, however, over the course of the week since we were here kicking off the week last Monday. Essentially, Brent a week ago was trading essentially just a few cents below where we are at the moment. So ultimately, not a lot of change on the front month, but ultimately a lot of noise on the headlines. Let's kick off as always on Monday morning with Omar Najia, the head of trading derivatives at BB Energy. Omar, looking at the sort of big headline really that's coming ultimately down the shipping lanes, if you want to call it that, and that is the fact that the US is about to experience what is essentially a supply shock on the US economy. Trump's China tariffs. We've seen all sorts of data points coming in. The Port of Los Angeles is reporting about a third to 40% drop in arriving container ships, those 20-foot containers in which all the Barbie dolls get stuffed and the washing machines and whatever else America buys from China. This great tariff, this supply shock that's about to arrive on the US economy, is that priced into the oil market?
Um, well, I mean, I don't know how you would price kind of Barbie dolls against oil
Well,
or what.
40% drop in supply of anything you want to think of that comes from China in a container box every day of the week into the biggest port in the United States, which is Los Angeles.
Yeah, so you can argue that, like for example, truckers loading stuff out of the port, those will disappear, diesel will go lower, that kind of thing. So yeah, broad kind of brushstroke kind of thing. Yeah, but I think the bigger picture is one that where you have or where you're starting to have this very ugly word called stagflation rear its head. So stagflation will be very negative for oil, very negative for anything to do with growth, not necessarily negative for equity markets because they are basically they reward you not with anything except where inflation is. Okay, lots of US companies are not doing that great, but still, being part of the S&P, people need to park their money somewhere. So if we do get this stagflation kind of scenario, then I could see oil head a lot lower, which I think it will do anyway, and equity markets go up. But that would mean that the real economy, Main Street economy in the West, would be contracting as it is now. So yeah, we're negative oil. S&P, I think basically will go up. Inflation is definitely going to go substantially higher, which is why the US is having trouble selling any of these 10-year treasuries paying 4.5%, let's say, when inflation expectations are like 5% and money printing, growth of money supply is like 7, 8%. So it's a sure way to lose money. So yeah, negative oil prices, I think, yes.
Mehmet Oguchu, Group CEO, Global Resources Partnership, and Chairman of the London Energy Club. Mehmet, in Turkey, looking at obviously on that side, with Omar talking about the tariffs, but on the other side of this oil market is the geopolitics, the geopolitical risk. And again, we're not short of headlines over the weekend. We have on the sort of Russian-Ukraine side, Trump and Zelensky meeting on the sidelines of the Pope's funeral, indicating alignment on their views there. Zelensky's ready for a no, conditions ceasefire, and then separately on Gaza, Middle East, and the U.S. Talks with Iran, and you've got Netanyahu calling for a complete dismantlement of of Iran's nuclear program. US are signaling something different. My question to you, Mehmet, is these two big geopolitical events, the oil markets, as I said in my introduction, are basically unmoved for 7 days. Are they not pricing in these events? Are these events not changing in any way that the oil markets should be reacting to? Your thoughts on these two big geopolitical theaters?
To be honest, John, right now, geopolitics matters less day to day than tariffs, high tariffs, and other changes taking place in the market. Because we are accustomed more or less to geopolitics, and we know what's to come, more or less. And we know also how to fight this instability and unpredictability. I'm talking about the oil markets. And OPEC Plus strategy has now shifted, as we know, to regain the loss of market share to the US, although there are some cracks within OPEC Plus as well, like in Kazakhstan and Iraq, oversupplying. And I think the tariffs will continue to matter a great deal. But geopolitically, as you said, there is a hope still, because you remember Trump wanted to stop the war 24 hours after he assumed the presidency in White House. Didn't happen because Trump is playing backgammon while Putin is playing his chess game. He's a master of that. And it seems that Ukraine will come to a point where they will grudgingly agree to Crimea to be annexed by Russia, because this is a precondition for, I think, Putin plus Donbass. Whereas the Ukrainian position was delay this, first have the ceasefire, and then the final settlement will come later on. But I think Putin insists that upfront this should be settled. It's not going to happen. Therefore, I'm not very optimistic that a deal will come through very quickly, because a deal which Zelensky cannot sell to his people will not work. But it will have implications for the energy markets, definitely.
Just to plug into that before moving on, Zelensky won't be able to sell giving up Crimea to its people. How much does Zelensky need to sell a deal to Europe, that Europe has to be aligned with whatever Zelensky is selling? Europe has said, whatever Zelensky does, we support. But ultimately, where do you think those two things meet?
I think Europe says this, of course, we will respect Ukrainian political leadership deciding and its people also agreeing to it. But behind the scenes is the Europe pushing forward, saying that if you give in to Russia right now on Crimea and Donbass, and Russia will not stop there. There is a concern about Central Europe, Baltics, Moldova. Therefore, I think European position is even more rigid than Ukraine's position, although they don't say it publicly. They say it's Zelensky to make the decision. So we shall see whether Europe will be relaxing its position, because you remember there was a deal in Istanbul in the very early stages of the conflict. Zelensky and Putin were about to agree. Then Boris Johnson flew and convinced Zelensky that he shouldn't go ahead with this deal. And I heard it firsthand from Boris Johnson as well, this. And so there, I think, is a more complicated political equation. Ukraine will not make this decision on its own. And the US has the interest to get it over, because in Trump's calendar, this is a real blockage. They want to solve the problem. With regard to Iran, Israel, and the talks are going on in Muscat and Rome, and US claims that some progress has been made. But I don't think that the current Iranian regime will make any big concession, especially on the nuclear matter. They know what happened in Libya, in Kazakhstan, in Ukraine, abandoning their nuclear, and then what situation they fell in. Therefore, I think US will push forward with also strong requests coming from Netanyahu to do something in Iran. It may not be a military intervention. It might be pushing for the regime change. I think this is what's going to happen.
But ultimately, you don't think a deal gets done there in either case, it sounds like. And so consequently, maybe the oil market is telling us that there's no change here for the oil market to react to. So hence the oil market is not reacting. Let's go to Japan. Yuri Humber, founder and president of Japan NRG platform at the Yuri Group. Yuri, Japan is sort of being held up as the test case of the big tariff face-off with the world, the US and the world. We're 1 month into this 90-day pause. Japan were kind of held up as Exhibit A, quick deal. They're big close buddies with the US. The US is their bodyguard. Ultimately, it even looks like the Japan negotiations for a tariff deal are, as it says in the Japan Times today, torturous was the headline in the Japan Times about the talks between Japan and the US. How significant do you think this negotiation is with Japan and the US? How difficult will it be? Is it an easy one? Will it get done? Your thoughts?
Thanks very much, Sean. Yes, not exactly an easy question. I think first of all, we just
not an
need
easy
to...
question about not an easy tariff talks, about not an easy relationship in which the bodyguard wants to kick you in the shins.
Well, right. I mean, I'm not sure if the bodyguard usually uses such language towards its presumably customer partner.
You haven't heard Trump speak
lately?
There's
been a massive amount of surprise about not so much maybe some of the demands, but some of the language that has, of course, the government and the Prime Minister Ishiba's administration isn't going to react to it beyond sort of what has become a customary government response of things like, this is regrettable, which most people sort of dismiss as being a little bit lukewarm, but in Japan has a more stronger flavor to it. But it has actually empowered some of the politicians that are a little bit less in the spotlight, certainly not only the opposition politicians, but those maybe, if you like, the backbenchers, to come forward and say, wait, this isn't really a negotiation, is it? I think that, but let's restate the the parameters of the assumptions that Japan does need to make some kind of deal with President Trump, and it believes, just as in the previous Trump administration, that a deal could be put forth. I think the complications this time around is that, one, there are a lot of different signals, not just from President Trump himself, but from the team around him. Just a case in point, is the yen part of the negotiations or not? We hear at the beginning some of the economic team behind President Trump saying that the yen absolutely has to strengthen, that the dollar has to weaken, and so forth. And then we have Mr. Besson say that actually the yen isn't part of the negotiations. There's obviously the negotiations, and then there's the conversation in the media. I understand that, but I think that there is a little bit of a confusion on the Japanese side because, for example, if you want to boil down sort of what has happened so far, you've had the White House say, we need a deal and we need a win. And Japan has sort of said, sure, and we absolutely would like to move forward with a win. Why? Because Prime Minister Ishiba's ratings are quite low. They're in the low 30s and continue to be in the low 30s, not just because of the international factors, so quite a lot of domestic factors. He's currently running a minority government. There's a lot of things that are kind of shaky in his position, and he has the upper house elections coming up in July. So he really needs a win too. Ironically, if the Trump administration pushes too hard and he looks like he has egg on his face, then he's going to do incredibly badly in those upper house elections and will likely then have to fall on his sword. So the opposite could also be true, that he gets a good deal out of this, somehow manages to score a win that he can sell to the public, therefore restoring somewhat his position and therefore giving the ruling party.
But can this be done within this 90-day window? Typically, Japan moves a lot slower on these sorts of things.
Well, I think the problem is the Japan side has gone to Washington and said, okay, what would you like what would you like in this deal? And there isn't a clear answer. So it's very difficult to put together a package if you don't really know what the other side wants.
What the target is. Where do you throw the dart if you don't know where the dartboard is? Omar, looking at this sort of stagnation, if you like, and this somewhat of a, it does seem that on all of these fronts, this sort of loud Trumpian bluster is running out of steam, or meeting the sort of punchback from lots of resistance, including within America. Your odd sort of senator or congressperson in state X is getting all sorts of heat from the ground and from people's resistance to the changes and so forth. And Trump pulling back even from the college foreign student visas now over the weekend. There's reports that the Justice Department is not pulled back from those who they've arrested and detained in the Louisiana gulag, but all the other visas that they have withdrawn from just generic student X because they've got a parking ticket. They seem to have backed away from that as well. Does this Trump reversal, is it going to lift the markets? Is it going to give hope of, and forget about all the noise of the first 100 days?
If you're asking if the S&P is going to go higher, yes. But if you're asking if Trump is coherent on anything, then the answer is no. So I would.
Well, you said inflation massively higher. If he retreats on all this stuff,
massively higher still. Whatever he does, massively higher. The US is in a really bad fiscal position, right? They need to refinance whatever it is, 9 trillion plus of debt. Everybody understands that inflation is going up. They can't sell their treasuries. They're dumping the dollar. Et cetera, et cetera. So it's quite clear. But as an economic thing, to do, tariffs and all this kind of stuff, unmitigated disaster, right? Because nobody understands them, let alone, the Trump administration. And the stuff to do with geopolitics. I mean, if you look at the Ukraine stuff, it's laughable, right? We'll recognize Crimea. Russia doesn't care if they recognize Crimea as being Russian or not. It already is. So all this stuff is just fluff, and basically the other stuff about we're going to attack Iran and we're going to do I don't know what, again, fluff. If there is any kind of attack, and how do you do, I mean, it's interesting. I'd like to know how you do regime change in Iran, by doing what exactly? I mean, it's been like 40 years, 50 years plus that they've been trying to do regime change, that they've put sanctions, they've done nothing. So I think as the crux of the thing, if Trump or Netanyahu or their allies, everywhere, if they try and do anything to do with Iran, the economy in the West implodes on day one. They know it. Iran knows it. Israel knows it. This is all bluster. So Trump says, I won't get pushed into war by Netanyahu, but if we don't get a deal, I'll lead. Try and explain basically to Americans that they're all going to lose their jobs, all their pensions. The US is the most financialized economy on the face of this earth. The S&P goes down to 2000. They will get no tax revenue. Their deficit will explode to the upside. The dollar will be burnt and the economy will implode. It's not that I have some kind of special insight. It's that's fact, right? That's absolute fact. So trying to argue that, here we are, blah, blah, blah. So I think all this is coming, if you want to understand the Trump administration, is coming from panic. They need to do something because the trajectory in which the US economy is headed is right into the cliff face. So they're trying to do the best that they can to get out of it by tanking the dollar, by telling their people that, tariffs are going to pay for tax cuts. All ludicrous, absolutely ludicrous if you look at them. The Doge numbers, we're going to cut $2 trillion from Doge. And it turns out now the latest number is 70 billion. It's down from 150 billion.
So ultimately, the U.S. cards, as they use the Trump word, you have no cards. The U.S. has no cards really in this face-off with Iran. Mehmet, I wanted just to drill down a little bit more granular to the region here and get your thoughts. I mean, there's a lot of big blustering global headlines that are smothering the daily reality that Palestinians in Gaza are getting slaughtered every day in large numbers, in even more devastating ways, and unrelenting than the first 18 months when the world was really watching. The last few months, the world's attention is somewhere else, and the slaughter is even more dramatic. We have the Israelis bombing relentlessly into Syria, taking over all of the Golan and all of the. There's a lot happening on the ground in the region, and yet there's no real pushback. Turkey, which was typically Erdogan was pushing back against this sort of thing, is now somewhat silent. Where are these sort of ongoing fires on the ground in the region, yet not surfacing to be any form of regional instability stemming from them? How do you put those two things together?
Well, I think we have to put this in the context of the global dynamics. I mean, I want to say a few words about Trump's 100 days before moving to this local issue. I think Trump lost some credibility now because of the threats he made and withdrawal, then goes again. And his strategy was Asia pivot. So moving away from Europe, Middle Eastern problems to Indo-Pacific, where he will be facing China. But to the contrary, it's not working the way he wants because of his disregard for international law and also tariffs and sovereignty issues. And he lost confidence of his not only enemies, but also traditional friends, be it Japan, Korea, and Singapore and all others. I think that's one point. And China is winning some brownies because the world is not about US only. China has enormous power in Asia, in Latin America, Middle East, Africa, even parts of Europe. Therefore, there might be a new coalition emerging against Trump, led by China somehow. I think this is a serious risk for Trump. He doesn't have the free hand to do whatever he likes on tariffs and geopolitical issues. Coming back to the region, again, he wanted to turn Gaza, as you know, as the Middle Eastern Riviera. Give us the Gaza and we will develop it like a precious property. Real estate development, and it doesn't work. Nobody is taking this very seriously.
It's certainly still moving in that direction. And putting aside the fantasy of that being the end goal, but clearly the continued demolition of Gaza is accelerating. And if it wasn't uninhabitable before, it's even more uninhabitable now. And so the pathway to a cleared out Gaza is clearly underway and continues.
Yes, but that's not for the US. That's the Netanyahu strategy to clean it up, even on the side of West Bank and East Jerusalem. He wants to do the same and push them to Syria, Lebanon, and wherever it can, even to Cyprus and Turkey. There are intentions. But this doesn't mean that it's going to be a real estate property for the United States. If US handles it, perhaps there will be less reaction. We are going to create, prosperity for the region, for all, and whatever. And he wants to do the same in Cyprus. We haven't come to that yet, but as soon as he meets Erdogan, if this happens at the end of May or later on, this is among his subjects to discuss with Erdogan as well. So I think Israeli policy is deep-rooted, affecting Washington, what Washington does there in terms of Iran, Syria as well. I mean, now Israel destroyed all the military facilities and assets of Syria. They have nothing left. And Turkey wants to establish some military bases and preemptively also striking these potential military bases in Syria because they don't want Turkey to come closer to Israeli border, at least, because they want to have freedom of maneuver.
We should be taking Netanyahu quite seriously when he continues for years, and most recently yesterday, that Iran should not have any civilian or military nuclear program. Given what Israel is doing and has done over the last period of time, the threat to Iran has to be taken as a serious consideration, and yet we don't see that reflected in any of the markets.
I think it is a serious threat, and Washington is acting very closely aligned with Israel in this regard. Israel is the mastermind of what's to do in Syria, in Lebanon, in Gaza, and vis-a-vis also Iran. And then Washington comes in to support that, even if it doesn't like, because there's such a strong Israeli or Jewish lobby in Washington that drives this initiative. So I think Israel will not stop there until it will be stopped, and they will continue. There was even talk of a likely conflict with Turkey, a NATO nation, strategic ally for a long time because of what's happening in Gaza. This has been disrupted. And as soon as Trump meets Erdogan, I think he will also push for a renewal of relationship between Tel Aviv and Ankara, shaking hands. Although Erdogan will hate that, but he has to do it if he is going to deal with Trump. So we are going to see quite interesting developments coming up. Probably at the end of May, Trump will be taking a tour of Middle Eastern nations. He might make a stopover in Ankara as well. There, I mean, as our previous speaker mentioned, the midterm elections coming up, and he has to show something to the
Let's
electorate.
go to Yuri in Japan, and just pick up, Yuri, on the previous points you made and mentioned earlier as well. The survey questions up there: Trump's China tariffs to unleash supply shock on U.S. economy, because the 140% tariff, the impact of that is now trickling through to actually container boxes on ships going from China to Los Angeles are down 30 to 40% in the first month. So the sort of follow through of that over many months is not insignificant. Is that bullish or bearish for oil prices, though? That is the question. Yuri, looking at the wider issue of the tariffs, the global tariffs, but particularly on Asia, Japan seems to be resisting Trump's efforts to form a trade bloc against China. China has gone out to the Asian region on a tour, has indicated, let's stick together, let's continue to trade, let's not join with this idea of a Trump effort to isolate China. Your thoughts on that and Japan's position on that?
Well, first of all, I think this is probably the world's most expensive lesson in economics that we've ever seen. Perhaps I'm missing some of the genius behind it, but there seems to be a lot of reactive changes in the US administration when they sort of realize that some of the impacts that their rules or new order has had, that these impacts are not actually sustainable for the domestic audience. So I think similarly, there are red lines, absolute red lines that countries cannot go over. In Japan's case, the idea that you would stop trading with China, which is right on your border, which is the other major economy in the region, that is basically the #1 trade partner for Japan in the Asia Pacific region. I mean, it's a nonsense. Yes, you could sort of try and, as the Biden administration tried to do, say, well, can we minimize trade in certain very high spec things like semiconductors to try and maybe slow down the development of certain high tech on the Chinese side. Japan wasn't a huge fan of it, but was able to at least go along and do its best and ask the certain companies to restrain their sales, which is at the end of the day, that's what they have to do. They have to sell less, earn less money. In this case, it seems to be this even greater demand, and yet there is nothing on offer on the other. There is no flip side. I should say, sorry, there is no compensation. So you're just sort of saying, please curtail a massive amount of sales without offering a whole new market elsewhere, which is exactly the position a lot of Southeast Asian countries have found themselves in over the years, where they've been sort of put between, let's say, China and the US and said, well, we can't really pick either because both are extremely important for our economy. So I don't think you can go towards this very black and white scenario in terms of trade blocs and alliances. I don't think it will happen on the China side.
What about, I mean, what we've seen in Europe, where the Europeans have had to really rethink their post-Second World War relationship with the US and are aggressively moving into, the new Chancellor of Germany takes office in a few days with $1 trillion budget to seriously ramp up its military capabilities, etc. where does Japan, is there a new moment? Is it a, we have to rethink moment, or they're not taking that sort of European view?
Japan has been on a trajectory where it has to increase its military spending for a while. It has been, in fact, ironically, the Prime Minister Abe was the one that tried to push it most strongly and found it very difficult because of that sort of post-war, we shouldn't get involved, we shouldn't be focused on the military so much attitude. And then later on it has. So now Japan has a much stronger, more aggressive target to increase its military spending, which is still, of course, incredibly low compared to the Chinese military spending growth. But there, even that isn't enough for the US administration. From their point of view, it has to go even higher. And I think there's just a point at which, again, the economy cannot physically move that fast and cannot, the spending can't be allocated that quickly, because as, for example, we're talking about the trade negotiations right now, but you had the US side saying, well, how about you buy more LNG? Where are we going to use this LNG? Japan's LNG outlook is not entirely bearish, but certainly not entirely bullish. How about you buy more arms from the US? And I think the comment from the Japanese side was, well, we have ordered quite a few things and they haven't yet arrived. So there is only so much you can do from the trade side. Sure, there's a lot of creative not accounting, but lots of creative thinking going on right now. Could we buy more soybeans? Could we buy more XYZ? But there is a limit to how much any country can sort of commit itself on the economic front to imports from the US. And certainly, even going back to LNG, is it possible that, Japan is one of the core anchors investors in the Alaska LNG project, this giant project that the Trump administration would like to do? I suppose you could see it in some ways, but then it would have to basically not renew the contracts, most of the other contracts that it has with, Australia, Middle East, and so many other suppliers. And I don't think that Japan would.
There are long-term contracts that are locked in many different ways. We're not going to have to wrap it up there. Survey results says, I'm not sure. There it is, bearish. 2-to-1 bearish that this supply shock that's coming. It's a bit like a tsunami. You can sort of see it off the coast coming across the Pacific, or the lack thereof tsunami, because the ships are half empty or becoming at least a third emptier. And then that dominoes through the US economy. I think that is a wave that is unreversible, no matter what Trump decides in his own reversing. I think China really is determined on this occasion not to reverse anything, not to change posture until there's complete 100% clarity as to what a long-term plan looks like, rather than these Trumpian bits and bytes. The Chinese don't do that. They want long-term clarity. And so I think America is going to be held to a little bit of China pain here. Wrapping it up there, Omar Najia in Dubai, Mehmet Ogucu in Istanbul, Yuri Humber in Tokyo, all around the world in 30 minutes. No other podcast does that, let me tell you. See you soon. Oil prices unchanged this morning, Brent at 67.18. Have a great week, guys. All the best. Thank you.
Thank you. Thank you,
Thank
Sean.
you. Bye.